The Minority Market. Episode 36. The Importance of Waiting for Confirmation. One of the hardest skills to master in the market is waiting. Beginners want action. They want to enter early, catch the entire move, and feel smart for predicting the market. Unfortunately, this desire to be first often leads to being wrong. Waiting for confirmation is not about being slow. It is about being selective. It is about letting the market prove itself before you commit capital. Most beginners confuse anticipation with intelligence. They believe entering early gives them an advantage. In reality, early entries often carry the highest risk. Price has not yet shown commitment. Direction is uncertain. False moves are common. The minority understands that confirmation reduces uncertainty and improves probability. Confirmation does not mean waiting until the move is finished. It means waiting for signs that the market is accepting a new direction. This can include price holding above key levels, strong participation, controlled pullbacks, or alignment across multiple time frames. These signals show that the move has support, not just excitement. Another mistake beginners make is acting on single signals. One candle, one indicator cross, or one news headline is enough to trigger action. This is reactive behavior. The minority waits for multiple forms of alignment. They look for structure, behavior, and participation to agree. This layered confirmation creates higher quality decisions. Waiting for confirmation also protects you from emotional traps. When price spikes suddenly, fear of missing out increases. You feel urgency. Your heart rate increases. Rational thinking decreases. Confirmation forces you to slow down. It creates a pause between emotion and action. This pause is where discipline is built. Another important concept is false confirmation. Beginners sometimes mistake short-term movement for real acceptance. A single candle closing above resistance does not guarantee continuation. The minority waits to see how price behaves after the breakout. Does it hold? Does it retest and bounce? Does volume support the move? These observations matter. Waiting for confirmation also improves risk management. When you enter after the market shows direction, your stop placement becomes more logical. Structure is clearer. Invalid levels are more defined. This reduces random exits and emotional decision-making. Many beginners worry that waiting means missing opportunities. This fear is understandable. But markets produce endless setups. Capital is limited. Opportunities are not. The minority chooses quality over quantity. They accept missing trades in exchange for consistency. Another advantage of waiting is mental clarity. When you stop rushing, you stop feeling pressure. Trading becomes calmer. Decisions become more structured. Emotional fatigue reduces. This improves long-term performance more than any strategy. Waiting also builds confidence. When you enter trades based on clear confirmation instead of guesswork, outcomes become more predictable. Even losses feel easier to accept because they were based on process, not impulse. You must also understand that confirmation varies across strategies and time frames. Long-term investors wait for business fundamentals and trend stability. Swing traders wait for structure and volume behavior. Intraday traders wait for momentum alignment. The principle remains the same. Do not act until the market shows commitment. Another mistake beginners make is forcing trades during quiet markets. When volatility is low and structure is unclear, waiting is the best decision. The minority is comfortable doing nothing. They understand that inactivity is part of the process. Here is a simple exercise. Before entering any trade, write down 3 reasons why this setup is valid. If you cannot find 3 strong reasons based on behavior and structure, do not trade. This builds discipline and filters low-quality setups. Waiting for confirmation also trains patience. Patience is not passive. It is active observation. You watch, analyze, prepare, and wait for alignment. This mindset separates professionals from gamblers. The market rewards patience over prediction. It rewards discipline over excitement. When you internalize this, your relationship with the market changes. Remember, your job is not to catch every move. Your job is to participate in high-quality opportunities while protecting capital. Waiting for confirmation is one of the most powerful tools to achieve this. The minority does not rush. They observe. They prepare. They wait. When the market confirms, they act with confidence. This calm and structured approach is what builds long-term consistency. This is why waiting for confirmation is not weakness. It is strength. It is the foundation of professional market behavior.